Good.
All right, all right. Can you hear me okay?
I can.
Awesome, awesome. Okay, well, everybody, today is the 24th. July is almost in the history books. I want to thank everybody for taking the time out of their busy days to come hear what we have to say here. But before we move along, just want to take care of the legal mumbo jumbo here. I just want to make sure that everybody in attendance is aware that the information we share with you is strictly for educational purposes. It's not a solicitation to buy or sell anything. If you need investment advice or anything in that arena, please seek out a licensed registered investment advisor or another type of broker, someone who's licensed to give investment advice. Okay. And before we get going here, for the regular attendees, please bear with us. You know the drill here. For the new people, just want to take a brief moment here before we get into the presentation and let you know that not only do we have the most unique, award-winning scanning engine out there, but we've also taken a step that not a lot of firms do and built a community around it. And that community all kind of starts right up here at the top with our trading room, well, that trading room is free to everyone. You don't even have to be a subscriber to participate. It's moderated by Barry. He does a fantastic job, anywhere between, could be 400, 500, 600 people in there at any given time. Barry does a really good job at showing off the Trade Ideas technology and how he incorporates it into his own daily trading routine. And a lot of other good people hanging out in there as well. So a great place to learn and soak up the knowledge. Of course, today is the office hours with myself and Steve. I'll hand it off to Steve for Tuesdays. He does the trade of the week and he rides shotgun. And then, of course, we always like to change it up a little bit. So on Wednesdays, we bring in Dan, the CEO and founder, along with Brad Williams, the Chief Technical Officer. Give you a little bit different of a spin on things. Then Andy's the anchor guy on Thursdays, and I ride shotgun with him. And then the not so new anymore Friday support session, which has become a big hit. It's a 3-hour ongoing webinar from the hours of 11 to 2 Eastern time, 8 to 11 Pacific Standard. And so it's just pretty much come one, come all, anything trade ideas related. You can come in there and ask questions. So keep that in mind. That's something every day. And of course, everybody gets the weekends off. Now, one more little thing to point out before we...
Sorry, who? What did you say? Everybody gets the weekends off?
Well, I won't say everybody gets the weekends off, Steve.
Somebody's got to do the trade of the week.
Well, let me rephrase that. Let me frame it up better. Everybody gets the majority of the weekends off.
Okay, I'll buy that.
Nice catch, though. I like the fact you're paying attention, Steve.
We're working on the weekends too.
That is true. The trade of the week doesn't generate itself. Okay, so one more interesting little thing here. Hey, we're all traders. We all like charts. Well, check out this chart. Just letting you know that the AI has been a big hit, and the big orange arrow there is when we released Holly, and the corresponding inverted slope is our subscriber growth. So number one, want to thank you guys who are subscribers. And if you're not a subscriber, come on, join the party. All right, so first I'm going to hand it off here to Mr. Gomez, our in-house technical guru, so that he can talk about the big indices and what's happened and what we might expect in the future. So Steve, if you're ready, let me pass the baton over here.
All righty.
And you have it, sir.
Okay. There we go. You guys should be seeing my screen by now. All right, let me just check one thing here. Okay, hello everybody to my desktop. And what I usually do is kind of take a look at the bigger picture and help Jamie out speed on where the markets are and where we might be going and what we see. And I typically like to look at 4 different indices by way of their ETFs. S&P 500, we're looking at the spiders here. Trend line is still very much intact. It's not even really an issue at the moment because we have pushed so far above it. We've got a couple of gaps, one here and one here. The breakaway gaps are really never known until after the fact or way after the fact. Unless this doesn't get filled, this could be looked back in history as the great breakaway gap. we shall see, because we're showing no signs of pulling back. Small minor gap here, which could get filled at some point, maybe even on the opening drive. A lot of you probably have noticed the first hour of this market lately has been primarily selling, and then the buyers seem to step in after an hour and a half or 2 hours or so. And the afternoon kind of has an upward bias feel to it. That's just the way it's been lately. So what we're seeing here is the S&P is holding up nicely, kind of beginnings of a flagging kind of a pattern here on the daily chart. Moving sideways is much better consolidation than moving back in price, so that's always the stronger of the two. So no harm, no foul going on there in the S&Ps. Now we may be kind of, one thing that we could consider is, a channel is developing here. We could be getting to the high end of this channel, with this trend line here being the low end of the channel. At some point that could possibly happen. Stocks do tend to channel sometimes, but just a possibility. Looking at the Qs, they seem to be back in the role and comfortable with the role of leadership. So what's leading this market again? Technology. I mean, we had every single opportunity to pull back and fill this minor gap, and once again here, a possible breakaway gap that I've highlighted with my arrow. But time will tell. We'll see down the road. It would take a while to actually call that a breakaway gap, but nonetheless, a new close at all-time highs again for the NASDAQ. After all of that brutal volatility that we had last month, this floor held going back at this level, and we have not looked back since. And volume-wise, that's a 0.59 on the volume power shares QQQ out of 1.0 being normal volume. So in a sense, today was really only 60% of normal volume. Back at the SPYs on that data point, 76% of normal volume. So it's not exactly big volume. This is typical summer volume, but it's just kind of a lack of sellers and a lack of the market to want to pull back. But again, what I'm seeing there, the Qs giving the high sign that they are back in the driver's seat, leading this market higher. The diamond I thought was interesting, which is the Dow. A couple things here is this prior resistance level, which we broke out above. And you can see prior resistance once again becomes future support as we continue to bounce and test and close above. Doesn't matter if we wick through it, that's intraday. The matter is where we close. Whether you're looking at a weekly candle, you want to see a weekly chart with closed at the end of the week on Friday. If you're looking at daily charts, you want to really use the numbers at the end of the day. And so technically this thing is still okay. The Dow closed above its pivot line and did so with the same intent on Friday. The buyers came, stepped back in and pushed us back above that line. And lastly, the old IWM is just slowly moving out of its range. Hasn't really taken fire on its own. It kind of peaked out here to a new high, then gave a couple of days of pullback, but still in the upward trend, making higher lows and higher highs. So all four of our indices here are in perfect check. There's really no red caution flags being thrown up for the bulls at the moment, especially with the spiders. The S&P 500 just going sideways, looking like a flagging opportunity there. Probably soon to be pulled higher if the NASDAQ Qs continue a move like this. So that's what I've got on the general market. I have a couple other thoughts and maybe even a couple of trade setups before I pass it back to Jamie. What was the first thing? Well, the first thing, I'll tell you what the first thing is. It's very pleasant to look down to my squeeze 52 here and see only 2 stocks coming through the alert today, making new all-time, new 52-week highs on a short squeeze. Good old Weight Watchers hasn't disappointed for over a year, but this one run, if anybody's on game today, this is the trade of the week that came out this morning. So very pleased to see a good first day, a great first start. Once again, just trying to exploit stocks that are going to 52-week highs. If we look at the short float, it's 24%. I believe over the weekend it was a little bit higher. We got our adjustment today on some of the short floats have changed. But this is exactly what we would have hoped would happen on the trade of the week. And let me just quickly, because I'm going to save these for tomorrow, but this is what the stock was doing at the opening day as it broke out this morning on the trigger of the call. I always try to remind people relative volume, 5-minute volume and 1-minute volume. I've got real close together here on my single stock, and this is primarily what I'm monitoring as stocks try to make new highs or break out. Very good metrics there, 300%, 900% on the 1 minute. I think another time during the middle of the day we got this reading as well, as it was making again new highs. The relative volume went up to 3.3, 1,200% on the 5-minute and 39%. This is about as good as it gets in terms of what you want to see as a stock breaks out a trigger point or a resistance point in that particular case.
You know what, that is just, that's poetry in motion. And I hate to interrupt, but I have to put this out there for the audience to think about. Where else are you seeing these types of metrics being discussed in this capacity? Just put that in the back of your mind and think about it later, or you can think about it now. But you know, these specific metrics and this specific way that Steve is laying this out, where else are you seeing this? Okay, Steve, go ahead.
We're just trying to take the fire hose of data that is the market and simplify it into a trickle of a garden hose and simplify it down. So yes, very pleased on the way that went, and those volume metrics. I will readdress this again tomorrow night. If anybody joins us, we'll spend more time on this tomorrow night as well. But I just wanted to kind of tease that a little bit because we got such a good start on that particular one. And I do see somebody, please share that window. Thank you. So I'll go ahead and do that before I forget. This is an alert window that is only going to show you stocks that have a high short float percentage that are going to new 52-week highs. However, let me just show you one thing. There's a configuration filter in here that requires that the S&P be positive on the day. So this morning when the S&P was not positive, that was a grayed out blank filter. We got nothing out of it. And as you can see, right here, S&P changed today, 0. Means the S&P was up or was unchanged from the previous close. Well, that took us a little while to get to that point, but once we did, that filter became active and this particular scan became active as well. So without forgetting, I saw a couple of requests. I'm happy to save and share. If you open up the chat window on your GoToWebinar toolbar, which is floating, I'll just pop that cloud link in there. And real quick, when you click on the cloud link, it'll take you to this page right here. All you got to do is, come on, Steve. How about we just do it that way? Highlight the URL. Once you've done that, it's directly loaded into the cloud. You just got to click load because this is it right here at the bottom. So that's how easy you guys can get a copy of that Squeeze 52. I just dropped the cloud link into the chat window. So you should be good to go on that one. So aside from the trade of the week, a couple ones I want you to maybe keep an eye on. You know, if you guys recall two Mondays ago, we were really high on this HTZ as a short squeeze. That worked out pretty well. Well, Pandora is kind of looking like it wants to do the same thing. It was on my trend change lubricant last week, but now it's above one of the filters, so it's dropped off. That doesn't matter. It's still on my radar. If you guys look up inverted head and shoulders, that's pretty much a textbook graphic right there, what an inverted head and shoulders looks like. So the idea here is to try and catch a stock changing its trend using the short float of 39% currently to create yet another short squeeze, because that's what's been working. The shorts have been getting killed and the short squeeze plays have been working. So Pandora I like. I thought X closed interesting today, which is still a trade of the week, which is live. And what we got here is a nice little climb higher, a pullback, nice little kind of a washout bounce candle there today. But I feel like the pullback is now complete and X may be ready to move higher. Probably just something as simple as above today's highs is what I'd be looking at there. And then lastly, what also caught my attention, again, a short squeeze play, was JCPenney. JCPenney also a horrible downtrend, but we saw what happened to Sears Holding last week when Amazon teamed up with them. But forget all that speculation and fundamental news. It's got kind of a flag shape going here. So it caught my eye with an interesting shape. And so I think essentially, you know, we would just be very conservative to go ahead and mark up the high of that level and then let the trade come to us. If it triggers great. If it doesn't, it doesn't. But if it does decide to move higher out of that flag, once again, 42% short, better think about what they want to do with the position that's going against them. So X, JCPenney, and Pandora are stocks I think you might want to keep an eye on this week. And that's it for me. So if you want that alert 52-week squeeze, it's now in your chat window. And with that, I'll turn it back over to Jamie.
Well, thanks. That's really good stuff, Steve.
There you go.
All right. So you should have eyes back on my desktop.
Got it.
All right. Perfect. Okay. So first, let's go ahead and talk about what Holly did today, which was pretty interesting. So Holly showed up for the party today with this strategy set right here. 9 total strategies. We had 7 longs and 2 shorts. And of course, just because they make the cut does not necessarily mean that that trap is going to get sprung today. And we can see these guys down here produced 0 trades. And then all of these guys had a nice little smattering of trades. So not too shabby of a performance. We can see that these guys right here, these top 2 looking for a bounce in the count, came into the session with some pretty significant odds. I mean, 68.4% here, 61.5% here. They both produced 2 trades and hit both of them. So low trade count, overperforming on that guy today. Of course, 1 for 1 yields 100%, just like 1 for 1 on the loser side yields 0%. And of course, this guy kind of split the difference. 4 trades, 2 winners for a slight underperformance today. So that's just kind of a scoop on the general strategy count there. But let's take a look at the specific trades. And before we get into the specific trades here, for the new people who might be seeing Holly for the first time, what is Holly? Holly is our statistical model that we've created that does all the heavy lifting for us. In other words, there's backtesting involved. The backtester in and of itself saves everybody a huge amount of time, but guess what? Anybody that's used it knows, well, still lots of work to be done by the human. And it's tiring, and it takes a long time. So the next piece of the evolution was, well, how about we invent something that does the backtesting and the optimization for us? And that's how Holly was born. Holly's just a little over 1.5 years old. And what is her superpower? To bring you entries that not only may look conducive on a chart in the old ways, but also come packed with statistical probability on our side. So that's really what the strong suit of the system is. In other words, it's just another window. It just happens to be an AI that's producing the information, but we can just call this another high quality information source where we know, okay, start looking at the trades, and let's pretend that, you know, we're trying to get used to Holly as she calls out these trades. So let's just pull up an example here. Let's go look at WVE first. All right, so I'm looking at 5-minute candlesticks here. And notice when I double click here, everything's boom, mapped out on the chart for me, so I don't have to like look around and try to figure out where the points are. Number 1, here's where she calls the entry signal. Corresponds perfectly with the blue arrow and that bar and the blue line. So Holly gets long here. And then we see a little sideways action and then off to the races. Now, there are 5 reasons why Holly will get out of the trade. We can see the exit reasons right here in the exit reason column. And of course, just like every other trader out there, me, you, everybody else, we've got our system. Well, if we see something that looks good enough, we make the trade. What do we do after that? We put our stop loss in. If we are using a profit target, we go ahead and submit that as well. So we're covered. But then Holly has 3 more reasons why she can get out of the trade. Every strategy is designed around a certain intraday hold time, and we can see that right here. And then, of course, if we see the time stop, she didn't get stopped out, profit target did not get hit, that time expired, and she's going to do what she's programmed to do. That's that risk off. That's Holly operating in risk off. Risk off is also going to correspond with this dark shaded area. So this is the entire time Holly was in it. After she gets out, chart goes back to normal. Now, let's quickly touch base on risk off and risk on, because we can see risk off today on the trade count, 49 cents, taking more risk, about 4 times that much, almost $2. Now, risk on is simply staying in the trade indefinitely until the close. Risk off is getting out when she's supposed to. Now, you don't have to pick risk off or risk on right off the bat in the morning. This is just showing you what has happened since these positions were put on, staying in them versus using more conservative risk parameters. So we have to address, and in my opinion, the best way to address risk on is simply on a trade by trade basis. So in WVE, we see Holly getting out right here. We can either make the decision to get out with her and go risk off, or if we think the pattern is looking conducive and the stock might have a little bit more room in it, we're thinking to ourselves, okay, I see she's getting out. However, I think I'd like to stay in this for a little bit longer. And then, of course, that is going risk on. You're accepting a little bit more risk in hopes of a little bit more reward here. So really the game is trying to get a little bit of what we call the spread between risk off and risk on. And if you're brand new trying to get used to this functionality and this methodology, what you can do is a little bit of both. Get out of half with Holly. If the chart looks conducive, stay in the second half for a little bit more and manage your risk accordingly, whether that's using a trailing stop or simply readjusting your stops manually for your preferred intraday time frame every 5 minutes, every 10 minutes, every 15 minutes. So this may look on the surface, it can be very confusing, especially to a new user, all these columns. Okay, well, this is the strategy. These are the individual trades. But when you start to approach it from this, you go, okay, is Holly getting out? Why is she getting out? Does it look like it might have a little bit more room in it? And of course, a lot of the times we can consult the daily to give us an idea of where this thing could go to.
Look left.
Yep.
Just like crossing the street.
Yeah. Which is going to feed in nicely to the second part of the presentation here. All right, so that was WVE, nice little winner. This guy right here, the VSAR, same song and dance. Stock looks a little thin, but I was checking out the candles here, just in that 5 minute period, 20,000 shares traded. So a little spotty looking on the chart, but as long as you're not doing huge amounts, probably not too hard to get a fill in this thing today. Now, of course, stop losses down here, took a little pullback, and we're going to talk about what happens and what you should do in the next example about when you see Holly in the red. But as far as this case goes, we get a nice little sideways action, which is common for some of these plays, and then we can see it breaks out of its range, tries to here, takes a little pullback, and then finally does it right here for the bigger part of the move, right? So Holly got out right here when the thing's going sideways. So once again, we'd have to make the decision, get out with her or stay in, or the ideal way to do it until you get used to it, do a little bit of both. Take that money, protect what you've made, and try to make a little bit more on the second lot. You decide to stay in, that's you going risk on. Now, looking at this chart here, risk off today was just pretty much green the whole day. It did have its little pullbacks here. Risk on, this is very common to see this. Just going negative and finally getting in the green. And we can treat this kind of like a stock when we're talking about, okay, pockets, air pockets, or areas of the market where the statistical probability is really catching some traction versus areas where we're hitting air pockets going up and down. So we can treat Holly's intraday P&L as if it were a stock. We've seen this happen. It comes down here, and as we edge back up, you could trade this or gear your expectations for what might come next, or getting into some of the Holly's positions that have been slightly positive. Once you see this pop above this line, it's the same as a stock. That can help us, temper our expectations. Okay, when to get a little bit more aggressive on Holly's plays. So the other type of trade, we talk about risk on, risk off, going risk on, and we also like to talk about what we call trade arounds. And GNCA is a perfect example of a trade around today. Here's the entry bar, entry price right here. We can see, hey, yay, we're in the money, yee. And then, of course, as stocks typically do, pull back. And we're back to flat, kind of hugging that signal line. Now, Holly, on this one, you can see risk off, she took an 8-cent profit on her profit save functionality, which is basically her form of trailing stop, so that she doesn't let profitable positions turn negative. So she did a good job on this initial pullback, took her 8 cents, and look what happens. The stock continues to go down. Doesn't quite stop us out right here, but very close. And then on one final push, bam, 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 runs the stops. And notice how, like clockwork, runs the stops, comes back up here, and then whoosh. Now, anybody that sees this move, whoosh, you know, you're going to be a little hesitant. You're like, okay, well, of course, I'm getting ahead of myself here. When we see Holly in the red, you look at her blotter and you're like, okay, she's in the red there. What you should get in the habit of doing is setting a price alert by right-clicking and creating that price alert, just like that. So that on the second attempt, if it happens, you're going to be told about it, which in this case did not happen until here. If it never gets back up there, alert's never going to trigger, right? So if we got the alert, boom, and then we pull it up and we're like, sure did expend a lot of energy in that 5-minute bar, but then it's on our radar. And then we see these nice little tight bars forming right underneath here. That's always a good sign. And then of course, wham, right here. So this is an example of a trade around. Didn't work the first time, but guess what? Statistical probability from these plays is good for the day. Sometimes the timing is just a little bit off. So perfect example of a trade around. Steve, did I miss anything in there? Any details? I'll take that as a no. All right, so a couple of good examples from trade around, one trade around, a couple of examples of going risk on. But all in all, a pretty solid day for Holly on a relatively low trade count. And that's what we always like to see. All right, so a little time check here and on to part 2, which is you're going to hear some of the same characteristics discussed as you heard Steve talking about when he was showing you all those metrics that he was looking at and talking about taking that huge information stream and shrinking it down. And really focusing on what is important, right? And when you do that, when you reduce everything down to its common denominator, which by the way, remember when we were all children learning basic math, and then we finally got up to that level where, okay, it's time for some algebra. What do they teach us to do? Well, you find the common denominators and you shrink everything down because that makes things a lot easier in math. Well, guess what? Same thing applies here, except there's not near as many variables. So the goal is always to simplify, all right? So let me just kind of walk you through what I was experiencing in real time as the market unfolded today. So number one, after the first 20 minutes, this is a screenshot that I tweeted out about the big caps. What are the big caps doing? The high volume big caps in the opening 20 minutes, trying to get a read on market direction today. So after the first 20 minutes, what do I see? 56% red, 44% green. Okay, well, what does that tell me? In the first 20 minutes, there's a lot of selling. Now, is it going to be continued selling, or is it just the opening flurry? Is this just a correlation? Because sometimes it is, and sometimes it means something a little bit different. So, having said that, let me just pull the old SPY chart up here. So we can see after the first 20 minutes, 5, 10, 15, 20, we'd already taken a pretty good little down leg, right? So in my mind, I'm thinking, well, it looks just to be more like a correlation. You know, is it going to continue? Don't know, maybe. But what would be my first signpost to look at? Look to the left. Okay, and so at this point in time, we're not quite to the bottom of this wick, but after down here, well, what are we doing? We're butting up right against the low of the prior close. At the same time, I was very conscious of these numbers all day, and these were a lot lower at that time. So I'm thinking to myself, okay, well, you know, there's a perception of selling in the market. The market is actually selling off. It's coming down. It's not just perception. It's happening, but it's happening on very low volume. So what does that tell me? That tells me, yeah, a lot of stocks are coming down, but it's on low volume, right? So unless we really punch through the low of Friday with some vigor, then I don't really see us, you know, doing much of anything. So those were just my thoughts. So I'm thinking to myself, okay, we're in an up market. We're seeing a little opening selling. We're butting up against here on low volume. Good chance we're going to stay range bound. Now, of course, there's never any certainty, but that's what was going through my mind. So I'm thinking to myself, okay, on the long side today, now, before I progress, since we're in a huge bull market right now, just because we see this, it doesn't mean short, 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 all right? Because we still want to go with the flow of the market. And what do I mean go with the flow? Path of least resistance. So in my mind today, I'm thinking, look, there's going to be plenty of stocks hitting nice upside. Am I going to find them? Maybe. Do I need to be super cautious today and very selective? Yes. Okay, Jamie, what should you do? You should try to keep your signals to under 10. Keep your long signals to under 10 signals. It's that type of day. And so that's what I set out to do. And so as the day progressed, when I'm talking about path of least resistance, and I start showing you stocks like LOGI, which was triggered today right here. See how we have this nice little consolidation pattern on LOGI? And then wham, when that little area right there is breached, LOGI new high doing at least 3 times normal 1 minute volume. You see how pretty the entry is. Anywhere in that bar, let me just kind of widen that out a little bit. Could have bought anywhere in that bar. You would have had no fear in that candle. What do we do to assess our risk on these plays? Well, you don't have to do it exactly like me, but I found this to be pretty effective. Not including the entry bar, we look back 15 minutes. 5, 10, 15, stop would have been right outside of that wick. And on some of these, never even acts like it's going to get there. But on this one, just a nice, beautiful progression, and it sets up another couple of times today. And then, of course, it's had some, you know, probably earnings in play today. Let's see. Where'd my earnings go? I guess I have it on here right now. But in any case, we can see the post-market activity. Boom, runs up, runs down, so it's in play. But this is up here more for entertainment value. I don't trade post-market, so, you know, nice intraday run. That's really all we're concerned about, which LOGI, you know, this simple pattern, there's no mystery here. You know what your risk is, and you know it's got some pizzazz behind it. You know that it has gas in the tank. Is there gas in the tank right here? Yeah, is there gas? Okay, well then how much? Because these stocks that I'm about to show you, of which LOGI is just one, they not only had a full tank of gas, but they had like nitrous in there. All right, these guys had all the gas they needed to get the job done. And the setup is simple. We rely on this pattern for the intraday setup, and then, oh yeah, our expectations. Look to the left on the daily. Well,
one thing if I could add on that one, maybe you touched on it because I was answering a question, but
sure.
The reason that's down after hours, if look at the single stock window,
right?
We got earnings today, so we've always got to get in the habit. If we see that 0.75 or 0.5,
oh yeah, I was looking right over it. It was staring right at it there. Yeah.
Yeah, I wasn't sure. So somebody brought that up in question, and I just wanted to remind everybody it's always a good idea to check that earnings date, and having the earnings date on your single stock window like that really is helpful.
Absolutely, absolutely. And I was looking for it earlier, but of course, sometimes when you're looking for it, it's right there in front of you. So yeah, earnings. So getting back to the topic, the nice simple fractal pattern occurring here to get us in on the intraday with low risk is the same thing that's unfolding here today, but on the daily. So when you get stocks like this in blue sky, that's the path of least resistance, right? Now, how long will it keep going up? Unknown. But LOGI might be one you want to keep on your watch list. Matter of fact, all the ones that I'm going to show here in a minute, you might want to keep these on your watch list for tomorrow. Okay, so as I said earlier, I said to myself, I'm going to keep it under 10. Turns out I came up with 8 of these guys today. And of course, let's look at the worst one today. Was this little guy right up at the top here. Gets in the money and then rolls back over. So, you know, in the money very briefly, depending on how you like to handle your risk. Did you sit the stop out? Did you take a little bit? You know, up to each individual person. This one went and then rolled back over. Okay, so that's 1 of 8. Now, let's look at the rest. This little guy right here, THG, Hanover Insurance, which I was thinking to myself, gee, I don't know if I've ever seen this stock before, but sure enough, here comes THG. I'm so used to seeing THC, Tenant Healthcare. I had to take a double take today, but entry point was generated right here. And once again, we've got very low risk and a nice little comforting, sorry about the noise pollution
A
there.
nice little comforting noise pollution.
Yeah, it sounds like a jet just flew by, but it wasn't. But it's gone now. Okay, so once again, beautiful risk on the prior 15 minutes. Nice entry signal here. It's not a runaway candle, and the less run up to that entry point is always the better. And of course, it just takes off. Once again, we've already ensured that these guys, if they go, if we get the good signal on the intraday, they're going to be in blue sky territory. All right, so that's THG, AOI. Oh, and this little guy, this little guy was just motoring today. Let's see here. Kind of trying to find whether it went on this one or this one. I'm pretty sure this is where the volume kicked in right here, as we can see. And of course, you know, nice little 15-minute setup here, and then it was just off to the races on that little guy. Once again, everything's going to be the same here. No resistance. And of course, Ferrari has been all over the map. You will remember this one from last week. I think we talked about it in mine and Andy's, so it should have already been one of these stocks that you're keeping on your radar. And of course, here's the very beautiful setup today. And by the way, I'm QuantBot on Twitter, QUANTBOT. If you want to go check these out at your leisure, by all means, just go check out the stream. You'll see all these markups. So here's race today, which is Ferrari. And I mean, whew, I mean, it was beautiful setup after beautiful setup today, just using this window right here.
Turbo Up Family. Okay. Well, somebody's asking, and when you get a chance, of course.
Of course, yeah.
When you show people how cool the technology is, of course they're going to want it.
Of course. So, all right, let's just continue through the little carnival that was today. We've already went through LOGI, another little stock that not a lot of people are aware of today, but the signal came right here, right here. Nice little 15-minute risk up. This one didn't go motoring like some of the other ones. It even retraced back down to your entry signal, but it continued higher the remainder of the day. Certainly never came close to any stop that would have been put in down here. All right, so not a bad little performer. And then even little double C, the signal was generated right here. Of course, you know, a little bit more of a run up than I like to see, but you know, cherry picking is cherry picking. If you made the entry here, you're still going to sit your risk down to here. Still not a bad risk whatsoever. And I move higher, and then there's kind of a consolidation. And of course, where is it? This one could just be getting started. You know, today was the first day. If you're fortunate enough to time it, you got some good play out of it on your introductory date. And then this little guy rounds these plays out today. So, you know, took a little excursion here, slowly marches back up, kind of, you know, gets us a nice risk level right here, 5, 10, 15, boom, looking back here for your risk, and then a nice, you know, this one eventually did gravitate back down, but I mean, you had plenty of time to take some good move out of the thing. So, you know, my goal was to keep it under 10 today. I came up with 8. And 7 of them, you know, other than AOI in the beginning being one that rolled back over. But if you were maintaining your risk, probably didn't get hurt that bad. And then the other 7 not only did they go, but they continued with extremely high volume. And once again, it's just all about the simple pattern. And you know, you're going to be hard pressed to find a more simple pattern here. And the beautiful thing about this window is when it comes across, it's going to even give you the exact value of the 1 minute volume. And you know, like Steve said, if you really want the 5 minute volume in there, you can add the 5 minute volume column. And you're probably going to see corresponding metrics. And of course, you know, this one's looking at for what's actually moving. If you take this and you modify it, you'll get a little bit fewer hits. That's just the nature of the beast. You know, what's hitting lifetime highs right now? Well, it's not a lot of the $5 stocks. It's a lot of the bigger cap stocks. But of course, you know, even if you came in and capped this one at 150 or 100, you're still going to get a lot of good plays coming through here. And really, when we boil it down, we can't dictate which stocks are going to be leading the market, but we can find them and participate. You know, because it's all about capturing that percentage move. A lot of people, you know, I hear this all the time. Well, if I can't get any shares, I can't make any money. Well, what does that even mean, right? Money's a byproduct of a good trade. If this stock's going to move 1, 2, 3%, you just have to allocate your bankroll accordingly. You know, if you start the day with 10,000 and you go, okay, I want to make 5 trades, well, then a good way to look at it might be, okay, on my 5 trades, I'll do $2,000 a pop. Sure, I won't get a whole lot of shares, but that's not what it's all about. We're in here for, you know, getting into plays and removing a little bit of alpha, and then determining if it fits into our risk profile. Does this one look good to risk overnight hold? And of course, we look to the left on the daily for that. But getting in the money is half the battle.
There's a good question there from Rob for you. How do you come up with the tighter 15-minute risk just below the recent swing?
Good question. That's a good question. And trading all boils down to, you guessed it, timing. So you see when Logi broke out right here, I didn't know that this stock was going to look like this when I pulled it up, right? But when I saw it, I'm like, oh, good Lord.
Sideways.
I mean, it's hard, you know, that you kind of hit on a good topic there, right? Because you don't know. All you do is when you see these things come up, you pull them up. So I just happened to pull, when I pulled up race, see, it has to be hitting a new high. That's the allure of the new high alert. Well, race, when I pulled it up, this was what was in front of my eyes. That's what we do. Oh, this is good right here. Now, if I would have pulled up race, let's say I was stuffing a sandwich down my throat, you know, so I don't pass out at the terminal. And when I came back, I hear my thing going ding, 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 and I missed this, and it's saying new high up here, and I'm just cursing because I missed this. All right. So yeah, you pull them up all the time, and they don't look like this, and those are the ones that you don't take, right? So this guy's showing us things that might look like this. It's up for us to decide if they do look like that. Now, on the examples of LOGI and race today, it just happened to be perfect timing, but not all the time, you know? So that's what we do. We might have to stumble through 5, 10, 15, 20 symbols or more, depending on the day, before we find the cherry ones like race and LOGI today. But once you get used to identifying it, that's the whole goal here. Make a simple pattern that's easy to identify. These guys just happen to fit the mold today, and the only reason that I saw them is because I was prepared. I know that this window right here will show me these because these patterns are here every day. This is the animal that I hunt to the T right here. This and LOGI. Now, sometimes they're a little bit more stretched out because, I mean, it's kind of really hard. Oops. Between race and LOGI, I mean, these are just, that's why it was just such a beautiful day. That's why 7 out of 8 of these worked so well today. And keep in mind, this is going long on a day where for most of the day, you know, all we saw was red, 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 and then a regression back to flat, basically. So it wasn't a big up day, but boy, if he knew where to look, in other words, I knew which forest to go to that had an abundance of the animals that I'm looking for, And guess what? I didn't see another hunter there the whole day. It was just, there's one, click. There's another one, click. Okay, I've got my limit. Time to go home. Try it again the next day. And that really is what, going back to Steve's example, 1 minute volume, 5 minute volume. Okay, 1 minute volume is what we're using here. We could add 5 minute, but most of the time on these guys, you're going to see the correlation. But I invite anybody to add that column. If you just want to, see if what I'm saying is accurate. But the whole thing about the 1 minute volume on these highs, it seems to work if you get proficient at picking out the pattern. So I hope I answered that question, Rob.
I think you did.
Well, I was just looking at Al's question. Now, there's not a lot of volume on that. Now,
well, if he's talking about race and Logi, Logi did 1.6 million today, and race almost did 1 million. So I wouldn't classify that unless it's a different symbol.
When you look right here, you see relative volume 1.86 and 1 million shares almost traded. See, yeah, you're right. That's not a lot of shares if you trade stocks that trade 2, 3, 4 million, but it's a lot of shares for Ferrari today. And that's a big thing, because people that say I only trade stocks that trade 1 million a day, they think they're protecting themselves, but really what they're doing is a lot of the time painting themselves into a corner, because guess what? Stock XYZ usually trades 700,000 a day, but today it's going to trade 4 million, but you didn't get it on your scanner because it has an average 700,000 a day over the past 30 trading days. Therefore, you missed the really liquid, high-flying stock just because of a filtering misconception. All right, so I hope everybody I hope this simple pattern makes sense. And, by watching this ticker every day, and of course, you kind of have to give these patterns 30, 45, sometimes an hour to develop. Sometimes they develop quicker, but the more time you fold in, the more pronounced that they can become. So I'm going to go ahead and drop this into the chat window here.
As soon as you do that, I got an idea. Dovetailing off of what you just said, it might be a good idea to wait 30 or 40 minutes sometimes for these patterns to start to set up. Well, after you've dropped that in there, why don't you show them how they could easily do that using the time of day filter, so you don't have to be distracted by this. You can have a time of day, turn this filter on 30 minutes after the open. So, and it's just a suggestion. It's not, I'm not saying do it, but for those that don't want too many bells and whistles and things flashing at them on the open, you can take any of our alerts and add the filter called time of day. And if you put like 30, a value of 30 in the minimum column, you're basically saying, do not show me any alerts until 30 minutes after the open. So if you didn't realize we had that, it can help slow things down and simplify things. And again, the bigger picture is here, we're trying to take the fire hose of data and slow it down and simplify it. And so if the first 30 minutes are not something you want to see in any of these alerts for that matter, you would use that time of day filter to suppress the data for you, in case you didn't know that.
Yep, and that's how we would do it. Hey, you don't want this thing to show signals until 30 minutes after the open? Fine, put a 30 in there. You want to shut up after 90 minutes? Cap it over here. So yeah, you can't do that. Pretty cool feature. And of course, this is a multi-strategy window, and just for clarification, there's 3 different versions of the same strategy in here. I've just kind of chopped them up into market cap. So 4 billion and higher, between 2 and 4 billion, and sub 2 billion. Of course, the strategy name will be told, and each one will have a different color. So green for the big guys, blue for the middle guys, and yellow for the smaller guys. And of course, you'll probably see more thinner type stocks coming through here, but the point is, instead of trying to filter out every thin stock, once again, I'd be painting myself into a corner and I might miss something. I can easily filter out the thin charts with my own human eyes, right? Light, another good one that I missed somehow today. Put another classic range break. We can see the corresponding volume increase. Light was another great one. But in any case, there's no secret here, ladies and gentlemen. What we're showing you are the simple ingredients. You can't make a cake without flour, or some butter and some other. I'm not a baker, right? But you know what I'm talking about. And so when we deduce everything down and we distill it and see what's left at the end, you've got the charts and you've got volume. And if you combine the two in this fashion, along with a window from the technology side, then you've got some simple things that produce big results.
Price alerts are probably not a bad idea either once you've identified the pattern that you like, and let the break come to you using a price alert.
That brings up another good topic, this pack leaders. All day, you can see the guys that are above their all-time highs, but they might be range bound, right? And you can easily tell the ones that are range bound because they've got a little space right here, right? So you're exactly right. After 20, 30, 40, whatever, an hour into the market, you go look at the market leaders, the pack leaders that have a little gap, and you pull them up and go, maybe I would have found Loggy after this first thing and go, ooh, well, I'm going to set a price alert in case it busts out of this little channel. So you can try to do some, prediction with your price alerts by, finding the ones that are close, that look nice and tight, and set the price alert. You just don't have that volume kicker behind it. You would have to look as it's unfolding, but that's very easy too, because if you got a price alert on one and it didn't come through here as well to meet that high 1 minute criteria, well, you could easily look over here at your 5 minute and go, well, it's still 2.5 times 5. That's good enough for me, right? I set these at 3 because I've watched these guys for a long time. That seems to be the sweet spot. But of course, as with anything, once you copy and paste this in and you save it to your cloud, you can always spawn multiple copies of it. Experiment with it. I highly encourage it. Change things up, see how it affects things. Make a small cap version, make something for under $5. You won't get many hits, but when that one $5 stock does go with volume, you'll know about it. Chance favors the prepared mind. Mr. Steve Gomez.
I did not coin that. I just like it.
I know. You popularized it recently. Okay.
All right, good stuff.
All right, so yeah, I think we're at a good stopping point. And Scott, if you're waiting, we're ready for you.
Great, thanks. All right.
And I think I can even find, I think I might be able to even find the slides that you want to look at, Scott.
All right, that would be amazing.
Yeah.
Yeah, thank you. So thanks everyone for attending. The questions panel was active, and I think we got to all of you. Do remember that we have a Trade Ideas podcast. It was a really good one that came out last Friday, and you should go ahead and go to your favorite podcast catcher, your favorite application, and just search for Trade Ideas podcast in it. You'll find us, and then subscribe to it and download the last episode. And check out the special guest episodes that we have in the back catalog too. And then there's going to be another new episode out this Friday. And we do try to get these out on Fridays a little bit after the market closes, so you can listen over the weekend and get some ideas for the coming week. So just go to your favorite podcast application and search for Trade Ideas Podcast and subscribe. We have a module called Brokerage Plus for interactive brokerage that's available for interactive brokerage clients. It's actually now, I think, in the standard release. It might be, or it might still be in beta. I need to double check on that, but for sure it's in the beta. And I believe that interactive brokerage clients can still get into it at no additional cost. So if you are an interactive brokerage client and you're interested in automating some of your trading through Trade Ideas using your strategies, then take a look at that and contact info@trade-ideas.com if you have any questions about getting set up with it or becoming one of the beta testers. It's pretty neat, and it's a great portfolio management tool. Some of you participated in the test drive, and some others here are also not regular subscribers yet. So you can use this code today and save 15% instantly off your first month or year. So off your first year, save a big 15%. That's huge. And whether you choose standard or premium, remember premium's where the AI and all the advanced features are at. both standard and premium come with a full hour of one-on-one training. So once you become a subscriber, you can go to the support panel on Trade Ideas support tab, then go to training and book your preferred time that's available with Jamie or Andy or Steve. Thanks everyone for attending. We'll have a recording of this up later tonight or tomorrow, and you'll get an email reminder tomorrow with a link to the playlist. Do keep in mind, if you have any questions, you can contact us. The best email for support is info@trade-ideas.com, but you can reach out to Jamie or Steve directly with the emails on your screen there. You can also download a handout. Just expand the handouts section on your GoToWebinar panel and click that little blue link there with the PDF, and you can get this contact information and save it to your desktop. Jamie is QuantBot on Twitter. Steve is Today Trader. Dan Merkin's Trade Ideas 1. We also have Trade Ideas and some other handles you can find if you follow our accounts. Thanks, everyone. Have a good one. We'll see some of you in the Trade of the Week webinar tomorrow, so stay tuned for that invite tonight. And thanks, Steve and Jamie.
Hey, thanks for popping by, everybody, and we'll see you tomorrow.
All right. Good job, Rob, by the way. Rob Wiener, good job winning the contest.
Yeah, congratulations, Rob. I believe you've got a training session scheduled with yours truly coming up.
All right.
Rob got a complimentary full year of Trade Ideas Premium, so enjoy that. Man. Good job.
Next test drive, we'll have another one, I'm sure. All right, guys. See you tomorrow.